game. So your point is 20 and over is, I mean, talking about this to most of our viewers may not be that relevant. We can't afford $20 million houses. But you say over 20 is great. It's just the 10 to 20 where it wasn't quite as good.
I think if you look at the quantity of sales over 10 million and above, it was down 13.5% year over year, 19 to 18. But if you really break it down by segment, 10 to 15, 15 to 20, 20 plus, the 30 plus market is outperforming at a 5-year high. The 20 to 30 plus market is relatively flat year over year. The problem child that we've identified is between 10 and 15. It's down 30% year over year. And since 2016, it's down 42%. So I think if you're looking at the quantity of sale differentiation, that's really the segment that people need to focus in on and look at it. And I think New Yorkers at large are saying, I'm just not getting enough value. So they're screaming to the market, I'm going to go elsewhere. Quality of life is better. Tax implications are different. I think if you have brutal legislation, I think if you have the media constantly bombarding the negativity around the macro market, people are going to look and say, like, is my 10 to 15 million dollars in New York City going to go far? And I think the answer is no. People are looking elsewhere. But if you have a different price segment, I think you need to take a very myopic and micro view of that segment and not just look at the market as a whole. And the narrative really needs to change around what is the luxury segment of the market.
So when did the mansion tax for New York City, when did that go into effect? People did things before that, right? And then,
yes.
And it has hurt, has it not?
The second quarter was the highest, the largest quantity of sales that New York City has ever seen.
So when in the third quarter?
It kicked in at the end of the second quarter. Second and third and fourth quarter, have been pretty terrible because I think a lot of people have been focusing on getting that purchase in before the mansion tax took effect.
All right, the Bloomberg headline is New York City's luxury real estate market was battered in 2019. Is that true?
I don't think it was bad. I think it was battered from an intention perspective. I think the bias was overwhelming. I think when people are walking on the streets and all they hear is negative information, and that's a macro perspective, it's hard for people to get very granular about their investment. So my goal is to change the psychology around how people are viewing their micro markets.
Well, you're in that business. I wonder what you sort of have to put on a happy face. But contracts signed for homes priced at $4 million or more fell 16% year over year in 2019.
It did. I think, again, consumers are looking at the value that they're getting for that amount of money. $4 million is no small chunk of change. So I think developers, I think sellers, they need to come up with a really specific hyper-targeted marketing and sales tactic that help to delineate their product. The days of the traditional brokerage model that you could just put up a listing on the internet and hope the market shows efficiency and brings you a buyer, it's over. I think you really need to be specific and hire resources that are going to be accountable and give you quantifiable value throughout the process of selling your home.
When you look at your part of the market over $10 million, what are the typical other macro factors that you assess that makes you think it's going to be a good year or bad year? I mean, S&P 500 up strongly this year. Does that always one for one lead to a strong year the next year?
Not one for one. I think sentiment is everything. I think for a lot of people who are ultra high net worth individuals, their lifestyle is not really going to change that much. But when they purchase that asset or when they take that investment, that's going to be dictated by the overall emotion of the market. So it doesn't hurt that the markets, the equity markets are thriving. So they're going to take money out of that market and put it back into a hard asset like real estate. But it's a timing perspective. The Hamptons, for example, they just had its best quarter in 5 years. There was 23 trades over $10 million in the fourth quarter. So, I mean, that's indicative of where people's sentiments are.
And so how does it work itself out? Is there an oversupply? How long does it take to
Yeah, I mean, there's an oversupply. The condo market in New York City represents 60% of the 10 million plus market. So I think you're going to see a longer absorption in the new development condo market.
2020 won't be much better, will it? And aren't we ready for these people in New York, these local people? You don't know what they'll do at any time. I mean, you got, AOC, Amazon, you got crazy, rhetoric and actions, right? And they could do anything at any time to try and soak. I mean, soaking the rich is sort of in vogue, is it not? Bernie Sanders might be the candidate.
People are definitely weary of what is to come. I think, again, people need a home. In New York City, it's usually a primary home for those who are spending that amount of money. If the pied-à-terre concept comes into play and it really drives people out of the city, people can do business anywhere in the world now. So they're looking to expand their horizons and find other markets that are better quality of life, lower tax implications, and better overall investment.